Hello and welcome to this episode of Akrinos Access. I'm your host, Eric Matei, joined today by Jackson Pace, CPA. Jackson is the founder of the Refractional CFO, and we're going to have a fascinating conversation today all about financial benchmarking and your practice. We've got a lot of really great things to get into regarding how doctors, entrepreneurial ECPs can really uncover so many remarkable opportunities in their practice by understanding how to read their financials, how to benchmark their financials, and inform their strategy moving forward. So, Jackson, hello, welcome back to Akrinos Access, man. It's so great to have you on the show.
Thanks, Eric. No, I appreciate you having me back on. Obviously I love what you're doing in the space and helping, practice owners and doctors out there kind of fulfill and realize their dreams. So I'm glad to be back on and hopefully we can add a little more to the conversation.
Let's do it. Well, I'll tell you what, let's go ahead and kick this off. Let's just start really high level, Jackson, right? And maybe just share, and I know you've got a vast, expansive background in accounting and you're working CPA and stuff like that. But so maybe start the conversation with just talking about financial benchmarking. Like, what exactly is it and why does it matter?
Yeah. So, any business and optometric practice is included in that mix. Whenever we're looking at our financials, obviously we've got to understand them. We've got to make heads and tails of them and understand what they're trying to tell us. So really when I look back and I think of, what is accounting? Why did I decide to go into accounting, become a CPA, spend all this time in this industry? And it really is, if you've ever learned a foreign language, I feel like accounting is that. It's the language of business. And so there's a lot of stuff that goes into having to understand basically the language of business. And so when we talk about financial benchmarking, it's exactly that. We're trying to figure out how a business is doing, specifically from a financial standpoint. And so with any practice, financial metrics, that's just one piece of the equation. We all know anybody that's run a practice, been involved in a practice, owns a practice. We all know that financials are one piece of the equation, but there's a lot more that goes into it. And so as we kind of today deep dive more on the financial aspect, hopefully it doesn't come across of we're going to ignore everything else. Nothing else is important but the financials. But at the end of the day, you've got to have money in your bank account. And if you don't, then the practice cannot go forward. And so benchmarking, it's a way to really help us understand if we're on track or if we're off track. And so, right down to as we look at our revenue goals, as we look at how much money we're spending on staff, how much money we're spending on rent, all these other line items. As we look at a profit and loss statement, we all know at the very top, we see our revenue. And then below our revenue is our cost. So in an optometric practice, how much we're spending on frames, lenses, these other costs that go into running a practice. And then below that are all these little expenses. So our employees, our utility bills, our rent. And at the bottom of that profit and loss, the goal is always to have it be a positive number because that means we're making money in the practice. If it's a negative number, that starts to send up these signals that something's off. And so going back to benchmarking, and feel free to jump in if you feel like I'm getting all over the place. But really benchmarking is a way to compare ourselves to the industry standards, which I feel like is a double-edged sword. There's, a practice. So, I'm located here in Southern Utah in St. George, beautiful place of the country. I always tell people, I got to put in my plug for Southern Utah. If anybody wants to come out and visit, I'm here.
Oh man, Zion. Well, we did GRT Summit. We did the very first GRT Summit right up the road from you in Zion.
Oh, Zion,
beautiful.
It's one of those places where even me, I've lived here my whole life in Utah. Every time I go into the kind of the entrance of Zion, you're just blown away. Like, is it real? Right. So. No, beautiful part of the country, in a beautiful place to have, an optometric practice as well. But not to get too much sidetracked. Going back to And now I'm going to actually lose my train of thought as well.
So we're talking about benchmarking, optometric practice. We're talking about the language of business. And by the way, I really like how you serve up financial benchmarking and data analytics stemming from the financial statements and cash flow. It very much is a language of business, right? Because I think what it does is it puts it in the context of the opportunity to then compare the business to others, right? And I know, well, heck, look, you're out there in southern Utah, I'm down here in southern Louisiana, and it gives, and yet respectively, I know Refractional CFO and Akrinos, we work with clients across the country, right? So this financial benchmarking gives us an opportunity to be able to compare practices, whether it's on a local, regional level, a national level, or what have you. And so why don't we go ahead and maybe start to unpack some of this stuff, Jackson, and talk about how you've seen benchmarking impacts the practice as it pertains to, I guess there's a few core areas I'd like to touch on. And maybe the first is, how does benchmarking impacts the practice from a standpoint of like strategic decision making?
Yeah. Especially as we go into January, hopefully every practice out there is starting to, if you haven't already been thinking about a budget for the year, or sometimes I hate the word budget, something, but really a financial forecast for 2024. Hopefully that's where your mindset is right now. And even could have been, in the last quarter of last year. So as we start looking at the practice, one thing for any practice that's critical to do is to really plan out where they feel like they're going to be between January 1 and December 31, as far as from a revenue perspective. And here's where, the really cool thing of working with optometric practices is the economics are universal. So it doesn't matter if you're in Southern Utah, doesn't matter if you're in Hawaii, doesn't matter if you're wherever the practice is located. For the most part, the economics are the sense in the sense that we serve patients. So patients come in, we provide services. They pay part of it, insurance pays part of it. There's always that struggle back and forth of we want more for insurance, but at the end of the day, we can realistically with any practice say over the course of a month, of 12 months, we're going to see X number of patients. And then once we figure out how many patients we're planning on seeing, then we can start to figure out what our revenues are going to be. And so, we have to start there to just understand what our expenses can be. Because we all know any benchmark, you can't have your costs, your expenses be more than what your revenue is going to be. So
at least not for too long.
At least not for too long. Yeah. I mean, obviously, if you're a brand new practice, cold start, sometimes we have to look at it as you're going to go to the bank, or maybe you've just got a pile of cash sitting around and you want to start a practice. But in that regard, every practice is going to start with something in the bank account, whether that's your working capital amount from your loan, whatever that is, you're going to know this is what we have to work with. And so even in that regard, that is your budget. Maybe it's $50,000. We've got it in the bank, and we're not going to forecast revenues coming in for maybe 3 months until we're on insurances, or could be even longer. And so based off of that, top line metric, the revenue or the how much cash we have in the bank, then that kind of helps us understand how many employees we can have, how many what we can do as far as rent for the practice and some of these different expenses that come into play. So
absolutely, and you hit on a lot of really great insights there. I think most notably is the fact that it's something that I think we'll get into shortly here, talking about benchmarking at different stages of practice lifecycle, right? Like you mentioned, a cold starting practice, you can have money in the bank. That's what working capital is there for, right? And Jackson, I'm sure over at Refractional CFO, just like here at Akrinos, we encourage doctors, don't look at it. This isn't debt. This isn't, debt, credit card debt. No, you're starting a business, and part of having starting a business is you do have access to that capital to invest in the business to see this thing take off. And so looking at benchmark through the lens of where you are in practice life cycle can be huge. But also there's something else that you mentioned there that certainly applies to anyone at any stage, and that is constructing some pro formas, right? This
Yeah.
financial forecast. I know within Akrinos, we do financial forecast and feasibility analysis, and it's huge. I mean, it can be absolutely remarkably eye-opening, no
Yeah.
pun intended. But I mean, really to understand how the numbers and operations come to hit. And that's another key piece that you mentioned there, Jackson, is taking the time to forecast your revenue goals, but then also tying that back to a patient volume, right?
Mhm.
And that's where drilling into production analytics, which may come up in our conversation today. We're drilling into production analytics, understanding that average revenue per patient and such
Yeah.
can help inform some of that. So love it. Absolutely benchmarking for strategic decision making. Let's talk a little bit about benchmarking. Now let's maybe look at it through the lens of like day-to-day operations and
Yeah.
workflows and maybe a bit of the patient journey. I know you were mentioning there a little bit about headcount
Yeah.
and your payroll expenses, but maybe let's talk a little bit more about how benchmarking can help inform where your spend is in your practice and how it's going to apply to operations and the patient journey.
Yeah, yeah. No, and I hopefully the patient is always top of mind whenever there's a conversation about benchmarks, operations. Again, that's who the practice is there to serve, is the patient. And so, again, going back to the economics of a practice, the reason why they're somewhat universal is, for the most part, it takes a certain amount of time to do an exam. And so, as you build out a practice, you might have 1,000 square foot practice, you might have a 10,000 square foot practice. That's going to kind of dictate the flow of your operations. In maybe a different way to rephrase that is how many patients you can see per day in that facility. And so, we look at how big is the practice, how many providers are in the practice. Obviously, if there's one, you're limited to what that one provider can do in a day. Versus if there's two, then we start to see some economies of scale there as the practice grows. And so, yeah, I mean, it'd be unrealistic to say we're going to open a practice that's 2,000 square feet and we're going to see 60 patients a day with one provider. We know that's not going to work. In a dream world, it would, but just
perhaps in the future, where we are now, we
yeah,
can't
where
fathom,
we're
right?
at now.
Because I mean, to put it in context, we could probably think there was a time where, well, there certainly was a time in conventional earlier generations of optometry where it was maybe like back in the day where optometrists did everything, right? It truly may have been only a patient an hour, a handful of patients a day. Whereas now we advanced technology. I mean, even just thinking, I was having a conversation just recently with someone who we're working with, helping them sell a practice.
Okay.
We were talking about just that, right? We're talking about just that. And from a standpoint of a buyer, looking at this practice that may have not sought out the economies of scale that the incoming that the buyer has, right? Like the perfect case in point. Hey, it's a one-lane practice. It's been here for decades. It's a one-lane practice. And by the way, Jackson, I mean, if it's our viewers out there, if this isn't happening right now in any town in America, right? But where you do have a one doctor, one lane practice, maybe just a handful of staff, serving 1,500-1,800 patients a year. And for the incoming generation to see the opportunity and say, wow, we can invest in some operations, we can invest in some technology, some infrastructure, maybe, bust out that wall and add a second exam lane and see how you can start to scale this practice. So it's fascinating. So I like it. It's a really great piece you said regarding understanding your capacity, right?
Yeah.
A key piece there.
And that's so kind of backing into benchmarks, one of the benchmarks in a practice is going to be patients per day. This is how many patients we feel like we can see. And again, for every practice, it's going to be a little bit different, but for the most part, the economics dictate that it's about, what it's going to be per provider in square foot. And so here we can start to now really get in the nuts and bolts of here we're setting these benchmarks. And so as we look at benchmarks, there's not always just dollar signs in front of them. Sometimes it is, how many patients. That's a very straightforward number. If you have, full retail optical, what do we feel like our capture rate is going to be? If we see 100 patients this week, how many patients do we expect to go into the optical, actually purchase, a pair of glasses, contacts, whatever that is. And here we can start to set those benchmarks. And here's where we can go out to the industry standards. We can see what average capture rates are. We can see what some of these industry standards are. And again, they're super useful. I always caution people, again, we don't want to compare a practice in St. George, Utah to maybe one in downtown New York. It's just going to be a little bit different. But again, I feel like as we go to these national publications and these industry benchmarks, if anything, they help start the conversation and they help get the brain flowing and thinking about where we want our practice to be. And so as we start to work through those, it starts with patients. How many can we see? What's the revenue that can be generated from those? And then as we start to get into our staffing, we have benchmarks with staffing. How many in the efficiencies of a practice, might dictate that maybe it's going to be super efficient if there's just one doctor and one person at the front desk. And then as that practice grows, maybe now the doctor can have a tech or a scribe that's going to help them become more efficient. And a common question is, well, how many techs or scribes can a doctor afford to have? And it really just goes down to basic math. If we bring on another tech, how many more patients can that practice now see per day? And then we calculate that revenue. And as long as we're paying for the wages plus adding to the bottom line of the practice, that's where it starts to make sense. And so, again, that's where sometimes I like to get into the nuts and bolts and the technical aspect of, how we actually do this, right down to the bookkeeping and understanding how we get all the numbers in there so that we can have those reports at the end of the day to analyze.
Sure.
But for practice owner, either you're an established practice owner, you're thinking about starting it, hopefully it's not something that you feel like is overwhelming to the point where, we're not dealing with complex math, we're not dealing with complex ratios, but we're just again, trying to simplify things and understand what makes sense for each individual practice.
And in so doing, by the way, that was a really excellent kind of explanation of kind of the process, right?
Yeah.
So to our listeners out there, right, really even rewind that and listen to that, kind of understand the process, the logic behind starting with the numbers, right? How do you tie the numbers to your day-to-day?
Mm-hmm.
And it's all a matter of understanding the averages within the practice. So common sizing your own practice, right? And then being able to apply that to benchmark. And something else you mentioned that I think is really important for folks to keep in mind, Jackson, is, absolutely industry benchmarks are great. Regional benchmarks are great.
Mm-hmm.
But I don't know about you, Jackson, but for me, I believe the number one benchmark is benchmarking against yourself, right?
Yeah.
So long as you can be making strides and making progress, realizing that, hey, you know what? Maybe in some years or quarters, you've done your analysis and you've identified some huge heaping opportunities in your financials, or perhaps you've only identified one little thing. Whatever it is, that progress, the incremental step is really what growing the business and having a business that's going to be sustainable and continue to thrive in all sorts of environments, right?
Yes.
We've got a comment here coming in. I don't know if it's a question or a comment. Okay. So here we go. So we've got Yvonne Mendrin. I think we both know Yvonne.
Yeah, I know Yvonne.
Collaborated with Yvonne on podcasts and stuff. And I know we've come to have the opportunity to work with Yvonne and his firm with some of our clients. So Yvonne asks, he says, all right, to help with benchmarking, are there certain ways practice owners should arrange their financial statements? For instance, certain categories on the P&L, and realizing that many are kind of by default, generalized, alphabetized, breaking apart income. Oh, wow, Yvonne, this is a really lengthy question. So anyhow, I just kind of roll it up though. But no, that was a really good question. So Jackson, suggestions you have, are there any certain ways that practice owners should arrange their financial statements to lend itself to to informed benchmarking?
Yeah, no, absolutely. And thanks for the question. Yvonne's always got the good questions. He's super knowledgeable too. So I appreciate
Absolutely. Absolutely.
When we look at financial statements, and when we say financial statements, I'm thinking profit and loss statement, balance sheet statement, statement of cash flows. Everybody's favorite one is usually the profit and loss statements. That's where we typically spend a lot of time. With the profit and loss statement, where I really feel like a lot of practices could just simplify things and save themselves a lot of headache and a lot of time, is just that in the way that they structure their chart of accounts and the way that it comes through on the actual profit and loss. And so what I really like to do is think of it this way, every single line item so if we just break it down revenue and we think about what's the revenues in a practice, we're going to have revenue from the clinic, seeing patients. And so that's a very defined line item, clinic revenue. Another very defined line item is like, you could either group it all as optical, or you could split it out: frames, lenses, contact lenses. Those are very specific line items in the optical that we can split out pretty easily. And so if we were to just keep it that simple and say, our revenue is made up of clinic revenue, which is the professional services, then the optical, which is frames, lenses, and contact lenses. Then what we can do is that next line down. So again, we're up here at the revenue. Now how do we analyze our costs? So I like to have my cost accounts mirror those revenue accounts. So we come down to cost, and we have, what's the cost of running clinic, in the sense of, how much are we paying the doctors, and what type of supplies are we having to purchase for that. The other one is frames. I mean, that's a super easy one. We get a frame bill. We can know how much our frames cost, our lenses, and then the contact lenses as well. And so just that in a nutshell, it helps us to understand and see how profitable we are over those different line items. And so we can take the revenue that clinic generated, minus the cost that it costs to generate that revenue, and it'll give us the gross profit margin on that line item. So that's kind of it in a nutshell, the top line. Then everything else down below it are really our operating expenses. So I group them into three simple buckets: people, place, and things. So our people, our personnel, it's got to be a separate line item because it's a significant cost in every single practice. And kind of forget all the arguments as what we should do, basically wages, if you want to include benefits, but really anything that goes into having an employee, that's what we consider our people costs. Our place, that's everything that's related to having a practice, an actual physical building that you can have clinic in, the repairs, the utilities, everything that goes along with that. And then everything else are the things. So our marketing, our professional services, our licensing, all these other little things that come in there, we group those all together. And typically, if we can lay it out in that order, then as we get to the point where we're going to analyze these numbers, it just makes it so much easier to do it because it's already been organized.
Absolutely. That was a really good breakdown, Jackson. Again, Yvonne, thank you for the question. Great question there. A really great breakdown, Jackson, of first and foremost the importance of breaking it down, and then secondly, kind of how to do it, right? So kind of to recap, I really like how you even talk about identifying your revenue streams, right? Sure, you can have it as one big roll-up revenue number, but wow, think about the insights you can get if you've got professional fees, optical dispensary, accessories, OTC, and then likewise, when you itemize your cost of goods, your COGS in such a way, you can immediately get a drill down as to what your margins are. And Jackson, this, I know we've spoken offline about this. This is such a hot topic right now in modern eye care. There's so many, well, interesting things going on in the market and dynamics between the role of managed care and the supply chain and independent lines. I think ever more now doctors are, let alone the competitive environment. But now more than ever, I think doctors and practice owners are really looking for ways to really optimize those margins. So, and then from there, so you have itemized revenue, itemized COGS. Then from there, I love how you suggested organizing those operating expenses as people, place, and things.
Yeah.
And through all of that, once again, to our listeners out there, it starts with structuring. I know we like to say internally in Akrinos, we talk about the bones, right? It starts with good bones. So if you have good bones and good structure, then it's really going to position you to get the most out of your analysis and your practice. And not only that, but also realizing that a lot of these decisions, Jackson, I know something else we've talked about offline is that these decisions also impact, cash flow and profitability today, but also the long-term value of this practice. And we're not talking about valuations today and talking about EBITDA and all these different economic performance measures of the practice, but it's all rooted in that chart of accounts. Love it, love it, love it. Okay, so man, we have touched on a lot of really great things, and why don't we now start to kind of shift gears? Because I know we could probably go hours on end and further dissecting these areas, but why don't we kind of start to pull things together and just share with doctors, for our listeners out there that see the opportunity in their practice and are ready to dig into some benchmarking of their own and deeper understanding. Where do they start? How can modern ECPs really start to make these strides to get that financial house in order to better understand these benchmarks and make some informed decisions?
Yeah. So it really starts really down at the transactional bookkeeping level. So hopefully you have an accounting system. I really like QuickBooks, but really having your data organized. So with any practice, every day there's a lot of transactions that happen. We have deposits that are being made, money's going out, and it's really just the matter of organizing those transactions so that when we run a profit and loss, they're popping into the correct categories that we want to see them in. And so, that's where you can go to some of the industry guides, just Google, what's a good chart of accounts, templates, there's, Eric, me, there's a lot of professionals that you can reach out as well and just say, hey, like, how should I structure these things? So once you get it structured, I feel like that's really step one, is going into your accounting software. Every accounting software has what's called a chart of accounts or your general ledger, and defining all the names on those and grouping things together so that it's, one, going to make sense in your practice, but two, going to provide a framework to help further analyze and understand what's going on. So step one. Step two is then really the day-to-day bookkeeping. So making sure that on a daily basis, you're going in there, you're categorizing all the transactions so that they're getting to where they need to go on the profit and loss statement, on the balance sheet, and on the statement of cash flows. And that's really step two, is just putting those daily transactions in. Step three, and I would even say, not that it's the final step, but it's really analyzing your final product. So at the end of the month, you'll have a whole month's worth of transactions that have been coded. You can go into that accounting software, you can pull the financial statements and start to see what was our revenue, what was our costs, what was our expenses, and where did our net income land. And if the net income's a really big number, you probably got a big smile on your face thinking like, hey, we're doing all right here. If the net income number is really small or maybe even a negative, then that's where you have to start to have that conversation either with yourself or with a professional to identify, where do we need to make changes so that the economics of this practice can be one that's going to be a profitable practice that can be in operation for a long time. So
really, really, really great. I mean, you've done such a great job of simplifying it, right? Because really, like in this world of financial benchmarking and metrics and KPIs, I mean, look, we open up any industry periodical or go into an online forum, and this is a hot topic of conversation everywhere, right? But I really like how you kind of boil it down to 3 simple steps, right? So to our listeners out there, it starts with the structure, and the structure is all rooted in that chart of accounts. And if you want to get more details, go ahead and rewind this episode where Jackson kind of laid out his recommendations for how to set up a modern optometric chart of accounts. Step 2 then is, maintain it in a day-to-day. Be sure that everything is being reconciled and you're keeping those books balanced, because then that's going to set you up for step 3, and that is the analysis.
Yeah.
And realizing that if the chart of accounts is there and it's precise and accurate, and everyone in and around the practice has been disciplined in maintaining the bookkeeping on a daily basis, then step 3, area 3, the analysis, it's going to be, I'm not going to say simple, but at least our starting point for starting to identify the peaks and valleys, the gaps and opportunities. We're going to kind of set the stage for that. Really, really great stuff. So, Jackson, this has been a really great episode, man. And once again, I feel like we could go for an entire segment of further dissecting any of this stuff. But before we hop off, why don't you share with folks a little bit about your scope of work? The work that you guys do at Refractional CFO, and for those that want to continue the conversation here and maybe learn more, how they can get in touch with you.
Yeah. So Refractional CFO, really a team there that really goes to work for optometric practices. So whether it's needing help with the bookkeeping, with the taxes, whatever you could imagine on the financial, accounting, bookkeeping side of the practice, we're hopefully there to support you. So if you want to chat with me personally, it's pretty easy. I try and make myself available to take phone calls if people need help or whatever it is. I've been in this industry now, for a while now, and so I feel like I've gained all this knowledge, and now it's just a matter of I want to make myself available so that I can share it and just help other people thrive. At the end of the day, just be successful. And so you can do that. Go to refractionalcfo.com. There's really just a button on there. You click on it, schedule a meeting, and you'll get a phone call from me. So.
And what an insightful phone call it will in all likely turn into being. But really, Jackson, for starters, man, thank you so much for the collaborations. I know to our viewers out there, actually Akrinos and Refractional CFO collaborate and working with a number of doctors across the country. So really remarkable work that you guys do over there. To our viewers out there, look, we hope you found this episode valuable, as Jackson joined us here on Akrinos Access, talking all about financial benchmarking and your practice. If you want to connect with Jackson, continue the conversation, or learn how Refractional CFO may help you achieve your goals in practice, head on over to refractionalcfo.com. You can get some time on Jackson's calendar. And for more great business solutions and practice management tips and insights just like this, subscribe to the Akrinos YouTube channel, follow Akrinos on the socials, and head on over to akrinos.com and check out how we can help you bring your practice vision to reality. Well, Jackson, thank you again so much for joining us here on Akrinos Access.
Okay. Thank you. It's been great.
Yeah, man. Have a good one. Bye-bye.